Hi, this is Kerry Artak with Artak Advisory, and this is the video supplement for AgriTalk show for March 22nd. So the Monday afternoon AgriTalk PM for March 22nd. In this video and on the show, I will be covering May corn, August ethanol, and May wheat. Before I jump into this, if you're watching this video, you probably are either on my website or you have access to the website. I do offer a new free trial every 6 months if you've already had one. And if you haven't had one, I would love for you to take advantage of that. Fill out the free trial form, your first, last name, email address, of course, and your phone number. And you'll get 2 weeks uninterrupted, effective immediately. I don't hit you over the head with all kinds of marketing, gimmicks and sales efforts, and I don't call you. I do call you once, just to inquire into your trading, to see if you'd like to do any consulting or need a consultant for your hedging and trading needs, so forth and so on. So take advantage of that free trial and see what this work might provide you going forward. Anyway, let's jump into May corn. This is a weekly continuation chart, volume-based rollover. In other words, it is nothing more than a series of lead contracts over time that string together like a chain. And that really is the only way you can effectively analyze the futures markets long term, a series of contracts that are strung together. I roll with volume. In other words, when May exceeded March a couple of weeks ago, I rolled immediately to May. Some people wait for March to go off the board, so to speak, to discontinue or expire entirely before they reflect May on their charts. That's more of a traditional rollover, but I think it's more effective to follow the money, so to speak. So this is big picture for corn. I've been mentioning this for months now on the show and with my newsletter, clientele. We have a new base of support at 465 and a quarter. I say new because following the December buy signal above it, this becomes our new floor, and above which we should reach the ceiling at 622.5 to 647 even over the months ahead. I'm still anticipating at some point this year that would accelerate if we did close above that 579 even 50% retracement level that we did test about a month ago when March was the lead contract. We rallied to within 1% of that longer term resistance area. So that still exists. It is a hurdle I do expect the market to overcome. Now, whether that is this week or 3 or 4 months from now is anybody's guess. But at some point, I suspect we're going to get up and over 579 even. And when we do, this market should resume its more accelerated upside pace. That 622.5 full channel extension, then in reach within 2 or 3 weeks perhaps, which is the start of a targeted range of long-term resistance up to 647 even that can contain annual buying pressures when tested. Now I'm going to take another quick look, zoom in a little bit on the corn. This is the same exact chart, but I'm zooming in on just sort of the last year or so of activity. And I just wanted to show this to you because this is what I'm seeing. What I showed you just a moment ago was big picture for the year itself. This is really sort of a midterm outlook into later spring, perhaps. A 511 even floor and a 579 even ceiling, which I showed you in the previous chart. This we can trade inside of, this wedge, this range that is narrowing ever so gradually. We could trade inside this through April into May expiration, for instance, perhaps rather. If we closed below 511 even, then that 465 and a quarter long-term channel top I showed you a moment ago would become a realistic, 3 to 5 week target. And inversely, as I also said a few moments ago, closing above 579 even should accelerate the 647 even target to within just a few months or less. Let's go on to August ethanol. Ethanol is backed off after putting out a high, a week or two ago. But I'm not reading too much into it. Bottom line with ethanol, as I mentioned on the show a few months ago, is that we are in the midst of a longer-term buy signal, having settled in January above this longer-term channel top, presently at 1.483. And so if tested over the next few weeks or few months. 1.483 can absorb selling through the rest of the year, and above which the 2.226 extreme channel top remains an annual target. This is not altogether different than what I'm seeing in corn right now at 647, which I showed you earlier part of this video. Now on the way up, what would accelerate that 2.226 target would be a settlement above this rising channel top that for the entire month of March, another week or so left, 1.882, and it rises in April, the entire month of April, to 1.942. And this is a formation that actually did contain buying pressure, as you can see, roughly in January. It can continue to contain monthly buying pressures, and if settled above, it should accelerate that 2.226 target to within 2 or 3 months, where ethanol can top out through the year. Now downside, and I don't see it happening, but if we did close any week or month below 1.483, all bets are off. This market should ease south into summer trade, but we're a long way from that right now. Let's jump into finally wheat. And once again, this is a weekly continuation chart, reflects the May contract. This is big picture stuff here. This chart goes back 14 years or so. I have solid long-term support at 600 even, rising 1/3 speed line, trend defining, that can absorb selling into later year, and above which this channel bottom that you can see, I'm curling around, this remains firmly intact through the rest of the year. We can push onward and upward. I'm not sure about 855 half within the year, but it's certainly in the cards. In fact, on the way up, while 736 even can contain monthly buying pressures if or when tested, it is this channel top that was tested in January, so it can continue to behave that way. But if we do close any week above 736 even, and that's not going to happen this week, but it could happen between now and the end of April, and if so, the 855 half long-term descending speed line becomes a realistic 2 to 3 month, 3 to 5 month target, where the broader wheat market can place an annual high quite easily. Now downside, I don't see it happening this week, but if we did close below 600 even, then I would envision the market is likely to continue south, and I'll just draw it right here roughly. It's around, right now it is at 481 even. So the low 480s, I'm going to say 3 to 5 months, maybe longer. If we close below $6 or 600, then 481 even becomes a realistic target that I think is likely by the end of the year. Until then, 600 even represents a floor of support above which you can and should buy pullbacks or not be hedged, lift hedges in that lower area. Finally, let's talk about we are on the finally part. There is a finally. Kansas City wheat. I wanted to show you a KC wheat chart, and that is a weekly continuation of Kansas City wheat. This chart presently reflects the May contract, and I've got all kinds of stuff going on here at 579 even, ascending speed line. There's also this channel top that we settled right at pretty much last Friday, around 586 even. This area, 579 even to 586 even, is one that can absorb selling into later year, and above which Kansas City wheat, or the broader Kansas City wheat market, can continue moving higher into later year. But inversely, I will mention that if we do close below this speed line in the coming weeks or months, then we have about a 2 to 3 month sell signal into the 510s, 515 and 3/4. And that was, by the way, the second week of April. So it's a little lower right now, but you get the idea. We close below 579 even. The very low $5 area becomes a realistic 2 to 3 month target. And I think that is really all that needs to be said for this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.